Hello guys, glad to have you on board again today. I hope you had a great rest yesterday. It was a holiday in France, so this is the reason why I haven't been making a video here and released it yesterday. So anyway, we're back on track today as usual. I'm gonna start with the Bitcoins and Ethereums. These are the only ones I will cover up right now, and this is the last time we're gonna talk about Ethereum. Just gonna review why I've been making that long-term call and why this is still pretty much very early to consider this a won battle. The price could very well drop a lot lower, but I don't really care at that point. So we're going to start with Ethereum first today. We're going to change a bit. So don't take about anything regarding the potential forecast. It really is pending and depend on the lowest price we could make. And as I said, we could pretty much go lower than that. That I wouldn't necessarily be surprised. What we have in here doesn't necessarily show me a good sign for what's to forecast. I strongly expect the price to drop another time. And I'll give you the examples today. So if you bought, once again, do you really want to change your mind? Do you absolutely need to catch the bottom? How much are you willing to risk to get that bottom? And is it absolutely necessary? As I said, to me, at that point, we're pretty much into very interesting prices. This is the potential target area. This is the potential invalidation area, which is fucking damn $0. What happens in between is not really important, because just have a look at this. If you're buying, for example, right now, you got $290. Okay, if it drops another, let's say $100, we get to $200. Okay, is it necessarily the end of the world? Not really. I mean, look at this. What this represents regarding that amount of price valuations we kind of expect. So it's not necessary right now to overthink things. It really is a binary choice. Do you want to invest in those cryptocurrencies or not? If you want to, you can choose to do it right now. You can choose to wait for it to have a little bit better prices. But in the end, we're really working around uninteresting things. If the goal in here is to go long term, you can just try to wait and get the bottom to brag yourself and tell your friends you've had better prices than they did. But really, think it that way. We're going to take the Bitcoins back in 2014 and we're going to just compare. So don't compare things like that, because we're not going to multiply the values like we've done during the latest stupid bullish move. But let's consider it that way. Okay, we go 2014. Okay, this is what we've done. Just for the sake of things, we're going to use the logarithmic scale to have better pricings. Okay, so let's say, for example, back in 2014, you bought your Bitcoins at $241. So pretty much approximately the price we're doing with Ethereums right now. So if you bought that price, okay, great. You've done it. If you bought the lowest price, $166, does that really make that big of a difference when you know that it went to 20,000s? We're not going to do the exact same thing, so let's just consider we went halfway through it. Let's assume that we will stop right in here, which is pretty much what I expect. You see, this is the bubble trading right in here. We're going to just remove the logarithmic scale. To me, Bitcoins were trading pretty much normally until then. This is the time, and I would say this is absolutely maximum. This is the price in here where we're just normal. This was just a trend. It was starting to be bubblish, but this is where the bubble really took place. So to me, everything that was above 4,600 was literally just dumb prices that we've been pricing to see how high we could get. And I would say 8,000 approximately, but that's the best I'm ready to take, which means let's take those prices. Let's say this was the target. Once again, an investment, catching the bottom, putting it all the way to the market top, getting the highest possible range price is for the dumb money. It's what we're trying to sell you for dumb. Smart money doesn't really care about buying the lowest price and exiting at the highest price. All they care is buying low, selling high. It's all we care about. Selling at the high is great. You can brag yourself and look smarter than your friends, but who gives a shit? What's important in the end is just to get and make damn fucking money. That's why we go to stock markets and any other markets, to make money without taking extensive amount of risks. Okay, it's taking gains by taking not too much risks of losing all the gains. This is how you do make money. This is the only rule. All the rest is just bullshit for people who care about this. So this was target. Now going back there and putting things in motion. Okay, if this was the target, and let's just assume it wasn't even going there. Let's say we were just going there, because approximately to me, this is what I think we might be doing with the next cycle. Creating a trend, but in there, not finding anything to create the bubble. So actually, this is what I think we could do regarding. So, putting it in context, if I bought right here, great, I'm having the damn fucking great price, and I can brag myself and say I was damn good at finding the bottom, but does it really matter? If, for example, right now, I just bought what the equivalent was to $200 back then. Yes, the price went to 160. Does it really make that big of a difference? Just put it into context. Okay? If I bought there to get the profits in here, which was the target, the equivalent of the target, I don't care if the price went higher and stupid guys made better profits than I did. All I care is have been managing my risks and taking a damn fucking gain. This is all I care about. Okay? To me, those who've been exiting and selling their bitcoins in there didn't really make a bad choice. They multiplied the price by 6, which is a damn fucking good investment. Then the rest, of course, could have been holded, which means when you're buying holding, and as I said, I'm not going to sell all my bitcoins at one time when I will get to the target I have for them. I'll let some room for the bitcoins to eventually take over, but I'm probably going to take 6, 7, at least 50% profits in there. Just take the gains out of my investments. So, in context, does that really make that big of a difference? Not at all. Not at all. So don't overthink things. Don't put too much risk into your tradings. This is what you do when you speculate, because when you are speculating, the entry price is absolutely, it needs to be precise and adjusted to the best risk management, because the better you go, the less risk you'll take. In an investment strategy, as I said, the risk is to damn go to zero. If the things goes to zero, then that's how it is. You lost your investment, you bet it on the wrong horse. That's how it goes. But if the horse you're betting into managed to get through the final line, all I care is not necessarily the position you'll have, but just the fact it goes to the damn final line, and I will take a gain no matter how, no matter what. So think smart and stop thinking like speculators. Now we're doing something absolutely different, which is called investing. When you're investing, you don't put money, you don't put leverage. You're just going to be really patient. It's going to require that patience, and if you don't have it, you're going to have problems ahead. So be patient, be smart. Don't really get into details right now. It's nothing close to being into details. That's what we do when we speculate, and we're no longer doing this. At least I am no longer doing this. So, now that being said, Ethereums, okay, I've got decent price to buy them. Bitcoins, nothing close to it, and I'm not. Okay, so Bitcoin could very well go bullish again. I don't give a shit. All I care about right now is that I don't have necessary elements to go forward this. So I'm basically waiting to have interesting price on Bitcoins. To me, those prices are still remaining the same, meaning below 4,000. So until we manage to get there, I'm not buying Bitcoins. I can be wrong. I can be right. I don't give a damn shit. I'm here to invest, no longer to speculate, which means I'm no longer selling the Bitcoins, but I'm no longer buying them. What I was doing back then was speculation to get money to buy and invest those Bitcoins and cryptocurrencies for free. I've been doing it because I'm ready to do it with Ethereums, because I'm having prices I want to invest into. Bitcoin hasn't given me this yet. So the only option I have is either buying higher pricings than the one I was expecting, or waiting to get lower prices. I'm taking option number 2. I could be right, I could be wrong. I don't give a damn. I'm not investing unless I have clear clues that this thing is over. So until we manage to break up that resistance, to me, we still have a high risk to go lower, and I would like to have those prices. So I'm patiently waiting and applying the scenarios that I've been putting for a long time right now. Just waiting is generally the best choice to do. So you better have to wait right now instead of just jumping into Bitcoins and thinking at complex scenarios that, like, if Ethereums are pumping, obviously the Bitcoin wills as well. So eventually Bitcoin already terminated the crash and things. Fuck it. Stop thinking. When you're investing, you're just taking something that has value to you that will probably worth a lot in the long term or in a mid to long term perspective, and you're just pushing yourself according to that scenario. You're putting yourself in, and then you damn wait. Okay? Moving on, because that's basically all I have to say regarding the cryptocurrencies. I don't have much more to say right now. I'm not going to cover up Ethereums for that reason. I don't really what I'm doing in those daily shows is the fact that I'm showing you how I managed to speculate. But as I said, I'm not speculating anymore into cryptocurrencies, which means I'm going to cover up those just for you, because I know some of you guys are still speculating, even though I will do it for you, because I know there's a lot of demand regarding this, and I'm also there to help you guys, and I want to help you with the things you trade, even though right now I strongly suggest if you want to keep playing the speculative game, then go somewhere else. I mean, right now speculating on the stock market is perfect timing. It's very risky, it's very tense, and we're going to talk about that right away, but I strongly invite you guys to just jump out of cryptocurrencies. Right now, it's no longer a speculative timing. We're in investment timing that requires patience, mindset, and if you're still into speculation, really move somewhere else. Cryptocurrency is no longer going to be your friend. So, that being said, moving on right now. Going on to the forex market, I think the dollar is showing finally some damn signs of weaknesses, and I'm pretty happy with that. So we're looking at this on a daily perspective. We're making bearish engulfing. I'm pretty interested to see how it will look like when we'll get to the candle close. But if for some reasons this was to stop like that, we're probably going to just fuck up Wall Street. They wanted to go higher forever, and we probably won't, which means we might have terminated an A wave. As I said, we've got multiple options in here. It's either we've already done that A-B correction, and we're already pulling into wave C, and that will be wave 1, 2, 3, 4, 5. But anyway, we're close to the end with the dollar. And to me, whenever the dollar ends, means the stock market will end at Wall Street. So Wall Street's dreams can still push us higher. And as I said, I don't know what the market will choose. As right now, everything points to the same direction. And there is two views to see that. There's a perma-bullish view to say, okay, all the signs showing in the same direction, saying that the risk should pull out, the VIX should go down one more time, we should buy stocks. And concentrate the money even further than it already is until it all blows up. This is what Wall Street says right now, that you shouldn't worry that the dollar is strong, the dollar is still going to be stronger forever, and that we are still ongoing with the trends, which means we're going to fuck up the gold, we're going to keep on pushing those prices lower to lower to lower to lower forever, as long as the stock market isn't ready to surrender the gains. That's how we say it in Wall Street. I'm going to go straight forward because actually the signal we had is just right here on the VIX. You're going to take the CBOE version. Okay, this is a VIX CFD contract, so it's slightly different. So take out the VIX, what the hell? No, this is not what I want. This is the exchange price volatility. Yes, so this is what we have. So basically, like Wall Street, we're going to do it on two perspectives, the bullish perspective, the bearish perspective, and then the market will make a choice. You'll have to pick one of those two scenarios, pick the one you favor. One of those two will be right, the second will be wrong. Once again, all I care is that you truly, duly manage your risks in between. So we're going to put those tiny dots. I think these are important things. Okay, so just to set things really straight to me, what we're doing right here is either the pre-signal for the final stage, or we're already into the final stage. It really is something like that. I'm just going to be really straightforward with you guys. So this is option number one. Okay, the first option is generally when we have something ongoing, it goes in a trend. It goes in odd waves, meaning 1, 3, 5, 7. It always goes like that, and we're gonna have even numbers when it gets to consolidations. Okay, so what we're having right here is signs of a trend, pure and simply. Okay, the thing is to know what stages of that trend we are. We clearly are in a bullish market in the equities. No one can say the opposite right now, but every bullish trend turns into a bearish trend at some point. The thing is that when you speculate, what you're searching for is that tipping point where the market reverses, because this is where you get the best risk-reward ratio to get on the opposite side. So this is what I'm doing. This is the only reason why I'm trying to stay at Wall Street, because I think we're trading potential prices for that tipping reversing point. I could be right, I could be wrong. If I'm wrong, I'm going to take a tiny loss. If I'm right, I'm going to take a fucking huge gain. This is how it goes, and this is why I'm doing it. I'm not trying to play God and say Wall Street has to go down. All I care about is that Wall Street may go down from those prices, and I want to trade that. So now moving on, just to avoid saying something I've been saying all over again for the latest few weeks. Moving into odd cycles. 1, 2, 3. So we're in the late stages, okay? So thinking that we'll go 4 is abnormal to me. We can clearly see those stages. Okay, we're going down, okay, we're pulling back, okay? We're going down, we're pulling back, breaking resistances. We're pulling back, we're breaking resistances. So as I said, either this is the beginning of the end, and basically in here we've made the lowest possible low we could make on that cycle after making higher low, and we'll make higher high, which means we eventually in the end of that volatility up cycle will get higher than the 50, and I think we will, which means recession and bubble bursts and things like that. We're probably going to have to suffer this. I don't see any different in terms of possibility. You take it in a monthly basis. If you have a look at 2008, we clearly went to very much higher valuation, and I strongly think that we'll have something comparable, not to say even higher, because we've been making historical lows on the volatility. You can bet we're going to make historical highs afterwards. So consider it that way. What we've done in here clearly is a way forward, which means whenever we terminate that long-term cycle, next cycle is obviously going to be the crash, the market crash. It's like what we've done back then. Okay, we've got pre-signal. This is this. Okay, pre-signal. Then we go to make the historical low of that cycle, which we've done in here. Then you got restoring volatility, and then the market keeps on going higher volatility towards the market crash. I don't think we're nearly at that stage, but I think we're at that stage right in here when we gave the pre-signals, and this is what we're heading toward to a volatility in here, for example, 30 to 40. This is where I think we're heading to. This is what I've been putting my target number 2 in here. I think we're going there, which is pretty damn far away from what we're currently trading. We're trading at 14, which means we could double the damn volatility if I'm right. So now moving into the daily chart to see how deep we are into that potential cycle. So this is option number 1. We keep on selling that volatility, but the problem is that we're going to go lower. We're going to make even number on the lows, which means we'll have to wait for 2 cycles and 2 stresses. Okay, consider it a stress way. If we do it that way, we're going to have to sell one more time afterwards. Probably not making new lows. Okay, it probably is going to be like that. So we're going to have one more downward push, not making new lows, and then things fall apart, and then we go to the volatility in here, 30, 40, and things like that. Okay, so this is one option. So sorry, this one isn't working. So this one, consider it that way. And in that perspective, we might have 2 volatility shots before heading into the end, which means in here we are selling the Turkish lira thing, which basically will be like nothing to the SPX. We're going to show the SPX price right next to this later on. So we're just going to do it right now, or yes, we're going to switch. So let's switch to the SPX. As you can see, the Turkish lira problem just costed Wall Street at the worst possible moment minus 2%, which is absolutely fucking nothing. If things had to go dirty, we can go far further than that, and volatility will just explode. Which means if we're just going to 18 or 21, makes the thing that Wall Street should go there. So if we're going down, volatility pulling to 21 could cost us a minus 5% drop. So as I said, it really is a 50-50% scenario into Wall Street. Wall Street obviously want to buy. They told us that they want it that way, that don't want to surrender the gains, they want to keep us going forever and doing this scenario. And as I said, crashing volatility, picking up, crashing again, but diverging, making higher highs on the prices, higher lows on the volatility index. And whenever we'll have that, this is where you want to get in, and you know that things that will happen afterwards will be recession, and you'll basically catch up the market up. As I said, this is the big short scenario. If that goes normal, and if that goes the way Wall Street want to sell it to you, this is what they will do. They will just basically crush the volatility once again, saying that, okay, Turkish lira risk, it wasn't a risk. So we're going to oscillate like this, okay, go there, 2 pushes to the downside. It's always 2 times, okay? So we're going to do this. It's actually 3 times, but the latest one is generally that tiny. So I'm probably going to do this, another burst, another tiny risk, the one I've been saying on Wall Street's tiny pullback. Sold once again, not making new lows, and then this is where the problems show up. Don't know how it goes, but this is how it could play out. This corresponds to the scenario I've been saying on the Wall Street, on SPX. Okay, scenario number 1. This is clearly what Wall Street would like to save us some time, give us some visibility, and probably before the end of October we'll have nasty seasonality at play, and that seasonality isn't gonna make us last toward the end of that year. So everyone thinking that we'll have a bullish year, we're not gonna have it. Either way, it's not possible. The best we could have is a range year, which means we're gonna close at the open price, and we might have a 2019 making the historical highs afterwards. That's the range option I've been saying to you, and in that perspective what we'll have is basically another volatility burst in here. I'm going to show you the difference between those 2 scenarios. This is short-term gains, nice gains into some very specific equities, and the rest of those equities will just suffer and enter recession pretty early. Option number 2, we'll let it go. We are going there. And this is leading us here, not necessarily end of the world. As I said, if we're going down right now, the SPX is not necessarily going to surrender the major support. It's just, to me, we can go there, damn, and stop all the bulls at long-term runs, but not necessarily entering recessions. Right in here, we've got trend lines, we've got things that can support the price, we've got horizontal support. If we fail right in here, to me this is just a range. A, B, C, we'll go there, we'll buy again. Doesn't mean the trend, the long-term trend is over. So if we want to save us some time and make that bullish market last longer, this is not the best option. This is the worst option, because it is short-term, and if it will happen this way and not last till the end of that year, and eventually, even though we could have some kind of unexpected event, something unexpectedly showing up and fucking up all the gains at once, and pulling out and reversing the risk. It's basically something wrong happened, something unexpected, and the market just collapses. And this option is non-negligible. At that stage, we've been piling up many risks. So any of those risks can just show up, and the market hasn't priced it, which means we know there are risks, but we don't want to price them at Wall Street. All those risks have been priced in by the other markets. Look at this. We clearly have risks, and we've priced it in. Does that look like a market who has been pricing something? Not at all. So if risks show up, we haven't priced them in at Wall Street, which means Wall Street will just collapse if any of those risks show up. So if the trade war goes all in, obviously Wall Street is going to suffer, and is going to suffer the most, because all other assets have been pricing this, but Wall Street. Okay, so have that in mind. If Wall Street just fall apart, it can very well be done with the euro area just holding on supports and Chinese holding on support as well. It's just Wall Street surrendering the gains as they should have done in the early stages. And then if for some reasons the economic war doesn't go into worse scenarios, I think buying in here might not necessarily be a bad choice. And if we do that, this is what the VIX should do to me. Going in there, so I'm going to make new lows than the one we've done earlier that year, but not making new highs on the VIX, divergent on the VIX, and generally what will happen afterwards is that we're going to have another cycle. Consider that in thirds. Okay, it's always going to be odd numbers when it goes to terminate bullish trends. So this is one option. So I'm going to put this one into a larger, a thicker line. So we're going to do it. This is option number 2. We go there anyway. We just go there, and then what we'll have is another volatility crushing that will go into 3 bearish waves. Okay, probably making new lows in here, going slightly lower, probably heading to 10, just making tiny lower low than what we've done in here, which was 10.2. So we're going to go lower than 10. Just once again, for a short-term call, we're going to go there, going to have another volatility burst, not going to break this high, so you can just like that, but breaking the previous highs. So we're going to go there, okay, breaking previous highs, sudden burst, then again volatility pulling down, not making new lows, and then the market crash. Okay, so this is one reason to do it. Consider it that way. We're going to do this, but could very well afterwards pull back, a recession anyway. Okay, means the volatility will be in an upward cycle afterwards on that option. First option, short-term sight. The second option, as I said, you can consider this as a really it isn't going to play that like this. If you do, once again, I'm no magician, I don't know about timing, but if we do it, if we do option number 2, we just go there, okay, then we're going to go down for a long time, probably leading us to 2019 to terminate that cycle. Okay, early 2019, probably another drop in volatility, pull back once again, not making new lows, and then we go into recession trade. Okay, so consider it that way in terms of volatility and volatility cycles. If we want to last longer, this option is better, which means let the volatility explode at short term and then selling it again a decent risk-reward ratio to get into finding more mid-term buyers instead of just fucking the sellers at short term to go as fast as we can, to as high as we can possibly go on such a little tiny amounts of assets. Okay, so the option in terms of psychology is clearly this. Either we put all the money into creating fucking nasty bubble, and we'll see that we have a very few choices. Got Apple, which is, if you zoom out Apple, once again, this is something that can add a bubble. If you look at the pricings, we can very well go parabolic in here. We have the room to do it. So if Wall Street is choosing option number 1, which is short-term scenario, making pretty damn nasty gains at short-term range, but afterwards we're going to fuck up everything, and to me it's not going to last till the end of 2018, which means we're going to enter recession kind of trades or big sell, big short before even heading into December. Option number 2, surrendering the gains, getting to long-term pricings, and probably we just go brutally reversing on Apple and things like that, but we're going to have interesting assets to buy, other assets that have been selling, and if we're not fucking up the credit bubble, we could just find another investment. As I said, the credit bubble to me can survive a 10 to 15% drop. But it's not going to survive a minus 30, 40. It's obviously going to trigger the credit bubble, which means if we go create bubbles in Wall Street, we'll obviously trigger the credit bubble as well, which means whenever we trigger the speculative bubble, we will trigger the credit bubble in the same time. And this is something we have never, ever seen in the entire market history. We've seen speculative bubble, we've seen credit bubble, we know how those two burst, we don't know how they burst when they are combined. And this is the reason why I want you guys to be really fully aware of the risks. We are ahead of something that we don't know if we go into scenario number 2, which is the one that is going parabolic on some specific assets like Apple. We got Nvidia, could very well be a bubble as well. As you can see, you can clearly see this one is already parabolic, but could very well do another shot. This will just be the volatility return. As I said, remember when you trade a bubble, you want to see a parabolic move. Then you want to see a volatility returning the market, and then the market picking up with lower volumes. We clearly have this, which means this bubble is ready to burst. But if for some reasons this is just a volatility pickup, then we might have a final outburst, totally stupid, adding, for example, 30 to 40% valuations, something really, really dumb. But we could very well do it. So Nvidia is a potential bubble, and we also have Boeing. Boeing, for some reasons, could be just volatility, head burst, and then we go bubble bursting. Okay, so we could do it. Yeah, clearly, to me, there is 3 assets that the market can buy. To me, Netflix, Amazon, Twitter, Facebook, Google, all those things have already been triggering their crashes. Tesla is nothing close to be bought. So, to me, it really is about Apple, Nvidia, Boeing, and another few assets that can go into attracting prices into bubbles. But if they do, as I said, it's scenario number 1, the VIX will crash again, but that will be short-term, not going to last more than a quarter, and then we're going to burst everything in the same time, both the credit bubble and a speculative bubble. It's not going to be pretty. So this is how it goes. I don't know what the market will choose. Once again, we're at the tipping point of a scenario, which means you pick one, you stick to it. If you're wrong, you surrender the losses. If you're right, you're going to take huge gains. If you want to play the bullish side, you're free to do it. Just be aware that you cannot do it with leverage, as I just do as the bearish side. I'm not doing it with leverage. Never, ever. And it's not going to happen until I get confirmations that my scenario is the right one. Whenever Wall Street's going to fall apart, I'm going to get into reinforcing the positions. But until then, I just don't do, and I wait and see. I just pick these speculative entries, and I remain low leveraged as long as this hasn't yet been validated. I thought we could do it yesterday, but we failed. Just going to show up what the prices have done yesterday on the cash market. So this is the cash index of the Nasdaq. We're making lower shadow candles out of potential support area. So once again, Wall Street doesn't surrender the gains. They doesn't want to. They make you think that this is going to go up forever. It leaves just not that many options today. Either we're going to invalidate yesterday's candle and break the highs. So it's 7,400. And as you can see, we're already there. Nasdaq's already there. So today, Nasdaq wants to invalidate yesterday's session. We'll see if it goes that way. We're going to have to invalidate this and then break up the resistance. If that happens, I'm out on the Nasdaq, which means the market will have made its choice. If it goes to historical high, I surrender the gains. No questions asked. I mean, the Nasdaq cannot go to make historical highs. If it goes there, I'm out. Means that Wall Street will have its damn fucking bubble, and I'll let them do it. But that will be choice number 2, which means afterwards we're going to have to suffer something that we never, ever, ever seen into entire market history, which is a double credit and speculative bubble burst in the same time. We'll see it. We'll see how it goes. We'll see how it plays out. We're going to make the first time ever this trial, and we'll see how it goes. But as you can see, generally when the market does something for the first time, it's generally not that pretty. So I'm pretty much, I'm curious actually. That's the mindset I'm currently in right now. I mean, people might think I'm scared. I don't give a shit. I mean, if I have to take a loss, it's going to be what? A 10% loss? Do you know how much I've been making since the year started? I'm pretty much going to be damn positive on 2018 anyway, even if I end this one with a loss. All I care about the fact that I would like the market to go downward is the fact that if it goes upward, I'm not going to be part of it, and I'm not going to trade that. I have a psychological limit that doesn't allow me to do this. I'm not going to buy the market. Okay, as I said, I'm not putting myself into bubbles because I know I know how it ends. I know the damages it can do to real economy, to real persons, to real fucking humans. Okay, I'm a trader. I know this is not the best job in the world, and that somehow I know what I'm doing is not healthy. But I don't give a shit. I have to earn my money. I'm ready to do some compromises here, but I'm not ready to make every compromise. There are some things I'm not ready to do, and participating a damn fucking bubble is not something I'm ready to do. I mean, Warren Buffett just bought some Apple thinking that, okay, we're going to profit from the bubble. Okay, this guy has no mind to me. It's just a devil in person. I'm not that kind of person. I have some convictions, and I'm going to stick to those. They're important to me, and I'm not going to be part of this. Okay, if the market chooses to go bubble, I'm just going to not trade this. I'm probably going to have to trade forex or bond market, but you're not going to see me trading a single stock to the bullish side anymore. I'm no longer buying anything at that point. It's been months for now. The only thing I'm buying in Wall Street is that damn General Electric, because I think this one has been oversold, and as you can see, this is a pretty damn cheap stock. So this I'm ready to buy, because once again, just as in the Bitcoins, this is an investment to me. Nothing close to speculative trades. This is buy and hold. What I've been buying on General Electric, I'm damn fucking holding it for years. So no problems to me. This is the only stock I'm buying. I can't do any difference. I'm telling you what I'm doing. This is what I'm doing in those shows. Doesn't mean I'll be right, wrong. I can be right in short term, wrong in short term, and right later. All I care is that I have a timing to speculate right now at Wall Street. I'm pretty damn curious to see how it will go. And I sincerely hope that for our futures will prevent us from doing that nasty short-term gains that will put us into a dangerous situation, facing something that we never seen before. So this is the option, but I mean, at some point, to me, that's dangerous, because I'm a father right now. I don't want my son to live through this. I don't want him to suffer from this, because I know generally history is there to remind us that whenever we do those things, it's generally not that pretty for normal human beings who will suffer from recessions and dangerous and deep recessions if we create fucking nasty damn things that we never done. But at some point, the trader I am has some curiosity. So it means I'm curious to see, if we choose option number one, what will it look like? So as a trader, I'm curious. But as a father, I really, really don't want us to do it. So I'm trading accordingly. I've been picking a side. If that's the wrong side, god damn it, I'm going to give a 10% loss. Not something I will like, but something I will definitely do eyes closed if it has to go that way. Okay? So I'm trading, speculating. Right, wrong is the matter of dumb traders. If all you're thinking right now is Phil going to be right? Should I follow it? Should I follow him? Or is it gonna be wrong? And maybe I should trade against him. If that's the way you see things, you're never ever gonna be a trader. Okay? We're gonna take a quick example just to illustrate that. For example, Jim Cramer yesterday just said, well, everybody thinks we're in the final leg of a bullish market, me included, but I just talked to Warren Buffett, and he's just got himself another $2 billion of Apple. So I don't think the market is over, the bullish market is yet to be over and things like that. Yes, that's an argument, right. But do you really think Warren Buffett has been putting the money right now? Do you really think Warren Buffett has been buying Apple at $207? Yes, he might have done it with $2 billion. But is it really the price has been buying Apple too? God damn it, no. It's been buying Apple at the lows, buying again in here, buying a tiny bit at the breakouts and things like that. So Warren Buffett is an investor, is a trader, and is a speculator as well. It's all in the same persons. So what it's doing in here is nothing close to investing in Apple. It's them fucking speculating that the bubble might trigger. It's been making a choice that just like I've made one. I've made my speculative choice to the downside. I can be right, I can be wrong. Do you really think Warren Buffett hasn't priced in the fact that he could be wrong? Are you really that fucking dumb? Do you really think that right now Warren Buffett's putting it all into Apple? Is investing long-term in there? No, fuck it. It's not doing anything close to this. It's just speculating and trying to trigger the bubble, and it is already ready to fail. Because just like me, is a damn fucking financial mind, and we all think the same way. We think that we might be right, we might be wrong, but we don't really give a shit. All we give a shit is just not to putting too much risk in there when we speculate. But this is clearly a speculation out of Warren Buffett. He's making the opposite choices I made, but that doesn't mean he's going to be right. Damn right he's got much more money than I do, but if people are not buying that damn shit, he's wrong, and he's going to take the loss, but he's not going to take a big loss because it's been buying there, which means the average price he's got on Apple is probably right here, which means even if things go wrong, it will exit right here and take a fucking nice gain in the end anyway. And to be right, I think its average price is right here and nothing close to this. So even if the price were to crash down to $160, it will pretty much then take a fucking gain. Okay? So don't be stupid. If you're thinking that just following Warren Buffett is going to make you a winner, Warren Buffett's just someone like me. Is just a damn speculator. What he's doing right now is speculating the fact that Wall Street will do that bubble. What if he's wrong? If he's wrong, it's not going to cost him a lot. If you're wrong, if he's wrong and you follow him, you're gonna be damn fucking taking a huge loss and you'll have bought the market top. So once again, speculators can never do this. You never buy a market top as a speculator. You can be wrong buying a market bottom at the wrong timing. I mean, a speculator will try buying in here, probably buying in there, but in the end he's gonna be right and he's gonna buy the bottoms, never ever doing the opposite. A speculator who is buying a market top is not a good speculator. Alright, sorry about that. I don't really remember what I was saying before. So anyway, we're going to move on. So as I said, if we had to create a bubble, really take care of Apple, Nvidia, Boeing, all those potential assets that has still some upward potential. Totally creating a bubble. So once again, it's going to be short term, it's not going to last long. And in the end, this will all burst and we'll get to make lower valuations than the one we're currently trading. So once again, if you are making value trades, it's nothing close like something we can buy. It's just if you want to do the speculative bubble, if you are allowing this into your mindset, if you're that kind of person who don't really care if you're going to fuck up the economy and just want to make gains, really you can do it. If the market chooses the bubble thing, then the only rational choice to follow it or not trading it. You're not fighting it. Let's set things really straight. Lots of you guys are going to be beginners and going to have the psychological problem of wanting to fight something that you're not part of. Which means if the market goes to choose the damn bubble, the only rational choice you'll have is to just stay away and not trading. I know it's going to be hard for most of you guys, but if you're trying to fight it some way and thinking that whenever the market enters the bubble, you have to chase the bubble market top each and every day or each and every week, no problem. You're going to have to be really patient, wait for at least 2 to 3 weeks, a couple more months, and whenever we get there, I will eventually search for another bearish timing, and once again, I'll do it totally transparently with you guys, but patience will be your only choice if you're not buying. So buying or not selling will be the only choice during the next few weeks and months if we are heading into bubble choice. If we're just fucking up the bulls, we're going to have to go fuck the stop losses, which means in that perspective, the NASDAQ will crash. It will go lower than that, and it's probably going to surrender at least 30% to me. So I think if we're already into end of trends, NASDAQ is going to burst. So NASDAQ is going to take a minus 25 to minus 30% drop almost instantly in just a few days and few weeks, which means Apple is going to fall. And if Apple is falling, obviously the NASDAQ is surrendering all the gains, and all the all the assets who's been already triggering crashes will just keep on pushing in their own crashes. Talking about Facebook, Netflix, and they will keep on going their ongoing crashes. So we have lots of rooms to the downside. It clearly is that way. I mean, Amazon can lose 30%, Apple can lose more than 30%. So we could very well make a minus 30% drop on NASDAQ without a problem. So if I'm right, and if we're ranging, the NASDAQ will crash. Okay, this is the thing I've been saying to you yesterday. Have that mindset. Probably NASDAQ is going to crash. And then get into finishing the crash with 2 waves where the SPX is going to do this. range, market top, and then consolidation. As I said, lots of the SPX components have been correcting. I've been pulling back. I've been suffering from losses recently. And the fact that we're surrendering the gains, and the fact that we're lasting the gains is the only fact that we've had lots of laggers and just a few gainers that have been overcoming the laggers. But if for some reasons the gainers become laggers, doesn't necessarily mean the laggers will take losses. They've been piling up the risk. They've been suffering from the risks. So if the risk shows up, they might not necessarily have to drop. So there will still be some bullish opportunities to make in the US market on support areas, on some specific assets, but all the big gainers, the big leaders on the NASDAQ obviously are going to drop and trigger bubble crashes. They've been trading like bubbles. They will have to crash like it. That's how it goes. If you take one, you have to suffer the consequences. We've been taking the bubble, you have to suffer the consequences, pure and simply. All right, so do it really simple regarding Wall Street. It's either we're failing here and Wall Street will make the market top later in 2019 and then we'll get into recession trades, which means this is where you want to make the big short and be really a lot more patient. Option number one is that we do it right now and probably is going to be until the end of that year that we get the timing. We're just going to let the bubble go in. Probably one more additional quarter, eventually two, if for some reason we manage to hold until the last part of December. And in that reason, we'll have a crash early 2019. Okay? So this is really clear to me. If we make a bullish 2018 is obviously going to crash. If we make a bubble in late 2018, we're going to probably not last into 2019 and going to crash before we do it. So I don't know what the market will pick. I think that if we want to have, let's say, visions, if we want to have sight about near-term future, saying a few quarters ahead, the best is to surrender the gains right now. So let Wall Street fall apart, pricing in the risks, and then eventually get into another trend into the bull side. So in a rational perspective, if you want the bull market to last a little bit longer, surrendering the gains right now might be the best choice to do it. Okay? And I know it's not what most of the guys will like to hear, but this is how it really is. And it gives me a timing for next year, probably around May, to get the sell in May and them fucking go away and to get into recession trades. Gonna last a couple years at best. No more than that. It's not the kind of recession that is going to kill the economy if we do this. We're just going to consolidate. I'm searching for my words. It's reorientating the economy toward the next economic cycle. We're taking money out of the sectors that have been outperforming and that won't be the performers of next year, of next cycle, which is probably the tech sector in the US, going to suffer a lot. And money is going to move out of technical sector to go into AI and data, in which I think probably Facebook could be one of the gainers because of the data they've been piling on us for some reasons. I'm not going to put a lot of money on Facebook, but I'm definitely going to put a lot of money on Google on the next economic cycle. I think there will be the damn fucking best gainers. So money will have to move out of tech sector to go into AI potential sectors that might be the economic leaders of the next economic cycle. So this is what recessions are about. People taking the money out of the previous cycle gains and the economy reshaping toward the next economic cycle. Okay, so anyway, world is not going to end until we do some nasty things like sending atomic bombs or things like that. I mean, the only way we can kill us is by keep on doing stupid choices, and at some point, one of those bad choices is just going to kill us. So to me, I know it's a very dark vision, but to me, I'm not forecasting the end of mankind. Not so fast, but just as I do in trading, unexpected things could very well happen at any time. So if we do stupid things and taking too much risk, at some point one of those risks can show up and just kill us all. So that would be stupid, and for mankind to do just something like that. I mean, look how smart we are, at least how smart we think we are. I mean, sending us fucking bombs over our heads would be the most stupid ending we could make. So I pretty damn hope we're not going to do this, and we're going to be smarter than that to just last a little bit longer. But if we're fucking up our planet as well, it's not something that, I mean, we're playing damn fucking risk with the planet, thinking that this can take all the shit we're doing on it. I mean, it's like, no problem, we can put that damn fucking CO2 in the atmosphere without problem and without suffering the consequences. We're already suffering those consequences. So if you're a rational mind, at some point piling up the risk is not something we should do. We can do it in Wall Street. All it does is triggering recession, and that's just economic consequences and human consequences at a world scale, yes. But if we're fucking up our planet, we doesn't have any other option right now. It's not like we can take ourselves into shadows and getting into Mars. We can't do it now. I mean, even though that's the fucking Musk dream that it's selling to the fucking damn guys into the Silicon Valley. I mean, if you think we're going to terminate in here, we're going psychology in here. Not even psychology. It's like we're even doing some fundamental thinking in here. It's like we're going into things that cannot be, that is pretty much aside from trading. But this is how our rich guys today are spending the money. They're buying Teslas. They are thinking about taking a trip into SpaceX. They are spending the money into cryogenic things. Do you really think that the normal people are into those things? No, they are not. I mean, like, talk to somebody, some normal person, somebody who's going to work in every day, who's taking the average amount of salary. Do you really think those guys want to have a Tesla? That doesn't even give a shit about Tesla. Do you really think those guys want to go to Mars? Not even close to it. Do you really think those damn guys want to get cryogenetics? Not a damn fucking thing. So this is clearly a bubble. This is a few people with a lot of money doesn't know what to do with that money and doing really stupid things and unnecessary things, just thinking that they're right, but they're just short-minded. They're thinking for themselves, not instead of thinking for the global. If you think global, you're going to make a lot more money than those guys, because their guys are short-sighted and short-minded, which means they're short-term gainers, but not long-term gainers. All I care about is being right in the long run, not in the short run. I mean, those who are buying Teslas right now can prove me wrong. They can take me a few losses, a few dollars of losses, but you can believe me, in the end, I'm going to take more money than those guys, simply because I have a longer-term mindset, a longer-term mind frame, and I think I'm smarter than those guys. And the money goes from smart persons and patient persons, from dumb short-term persons. So those who are buying Tesla right now, they might be gaining at short-term. I'm going to take the money in the end no matter what. It's just how it has always been, and it will always be the case. If you want to act smarter, think long-term. And you can be wrong at short-term, but as long as you remain open-minded and not short-sighted, you're always going to get the money. So anyway, that being said, I'm going to take the few questions you might have, and then we're going to move on with today's show and market forecasts. So, Bitcoins and Ethers sings as sense of panic. Yes, great. That's what I want to see. I like to see panic. I like to see, that's not necessarily panic that I want to see right now, it's surrender. As I said, I want to see that market feeling surrendering, like they've tried everything they could and they just lost it. So it doesn't worth anything. It's going to worth something, and that's something I'm ready to pay for it. So as I said, as always, those who've been putting leverage are going to be put it out, and those who've been waiting and passionately having a mindset will take those losses as pretty damn fucking nice, interesting investment prices. And as I said, investing is a long-run mindset. It's nothing close to a short-term gain, short-term things. Short-term things is what you do when you speculate, okay? And speculators are always proven wrong against investors, because that's how it goes. When you have an investment strategy, you've always got to be right. All you can be wrong about is picking the wrong candidate. But if those who invest into the right candidates always will be right upon the speculators who've been selling that value at that price. And I've been clear with that. What makes a person sell out of low prices? You have to think it that way, because this is how money, smart money, thinks it. They want your money. They want you out. The only way they can get you out is to force you into leverage trading. And the more leverage trading you're going to get into, the easier for them it will be to take that money, because they'll just have to lower the prices and take your maximum losses. You cannot invest more than the money you have, and generally speculators are doing it with tiny amounts of capital. And this tiny amount of capital and short side approach always gets the money in the end into the guys who've had a longer term mindset, more money, and a risk management. I'm sorry to tell you that, guys. I know it's cold-blooded. I know it's awful, but that's how it is. If you're trading short-term, if you're speculating, even more if you're doing it with leverage, your money is obviously going to get into someone else's pocket in the end. That's how it is. That's the hardest lesson you can get out of trading and getting into stock markets and just markets in general. Markets are not meant for dumb money to get more money, but they are meant for smart money to get more money. That's how it goes. Just thinking, I know it's simple, but that simplistic view is the only way it really works out there. So now, highly disagree with you. That next pump will be in, okay, once again, I don't do timing, I don't do magic. What you can do right now, telling me I'm right or wrong, is nothing I care about. All I care about right now is fucking getting return in the long run. You can prove me wrong at short sight and short term. I don't give a damn. Even if the Ethereum is going to 100, or even if it's going to $60, all I care about is not going to zero. The day it goes to zero, I'm wrong. Otherwise, I just wait. And you can turn it all the way around. I don't give a damn. Right now, I've been putting the cat in the box, and I'm damn waiting. And I can tell you that I think I'll be right. And I think it's just going to be a matter of time at that point. And time is something I can handle. I can wait. Those who can't wait will be those who will use leverage, because they have the pressure of that leverage upon their head. I don't. So what's the problem? The only problem is inside your head. If you've been making that buy and hold, the only problem right now is you. Because if you turn over, if you're a switcher, then you're going to be your own problem. You're going to be your worst enemy. Now all you have to do is being damn fucking patient. It's not like the hodlers who will telling you that shit at $15,000 a Bitcoin, because these were stupid behaviors. We were nothing close to investment prices. We currently are. So I'm right to play that game. I can be right. I can be wrong. Wrong is just going to cost me an asset that worth $0. Right is going to reward me an asset that I think is possibly going to worth approximately $180, $1,800, or $1,900. If we go there, I'll be, once again, I'm just doing it straightforward with you guys. I'm not making it easier for you. I'm just telling you the way it is. If I'm right, I'm going to take the damn gain out of the money you've been trying to buy with leverage, with speculation and things like that. In the end, you'll just have lost that money. I will take it and make the gains in the end. And I'm sorry, I know, as once again, it is cold-blooded, but this is how it works. Yes, I'm bullish on AUDNZD. Yes, I might give you the reasons, because this is a scenario I haven't been refreshing for a lot. I'm going to show you why this is the way I think. Oh, we're going to remove. Okay, I can hold it. This is a monthly scenario. So once again, as all the currencies are generally trading inside ranges, which means I like to trade currencies when they are at boundaries of that ranges. So you can consider it that way. I always use that. It's not something I've invented yesterday. You know about that about that thing, is that whenever you have ranges, the best way to trade that is to use that damn fucking Fibonacci retracement thing. So anything in the blue area or below is something I want to buy. Anything in the red area is something I want to sell. Anything in between is something I just want to play trend. Okay? So anywhere, any moment we'll go there. If we go there, I just don't know at that point. But if we go there, and if I'm right, if that market is about to reverse, could very well make another pullback and then go in. I think this has already shown an upward potential trend. So all we need right now is to break that downtrend. Whenever we'll break that downtrend line, we'll obviously get to enter the DOM area. So all the DOMs will try to trade against that or sell that shit or whatever, but the trend will be in it. We'll have trend inside. It's going to be a range trade, so it's not going to be a straight line in here necessarily. You can have pullbacks and things like that, but you don't have to care about this. All you need to care about is that you take partial gains onto speculative levels, but you target at least the opposite side, which is 61%. It's just a damn fucking scenario, as always in every damn fucking range in Earth. You get to target 61% retracement, which is the maximum target of the DOM area. Okay? And generally, the market plays it that way, which means we generally go inside the DOM zone, taking target number 1, target number 2, then we're retracing back into the blue, and then we're crossing it all the way. Okay? And the maximum target is in here. You don't target beyond that. And normally we shouldn't get there, which means we should have a maximum target in here. Target 1, 2, 3, then pulling back into the blue area, and then getting to the red. This is my scenario. Can be right, can be wrong, don't give a shit. All I care about is that we haven't yet entered the DOM zone, which means we have to, and then whenever we'll be into, I have to take gains, and whenever the market, if the market retraces, I'll just take the entire gains. If the market keeps on pushing, I'll just let it go to target number 2 and eventually target maximum. Okay? It can do it in a straight line. All I care is that once we get to the targets, I'll take the gains partially first, and then if the market reverses brutally, I'll take the rest. But anyway, it will be fucking nice gains. And I'll be ready to buy again whenever we get to the blue area, eyes closed. This is how you do trade forex. If you make it if you make it more complex, you're wrong. Then, for example, go to USD MXN. Okay, this is a long-term trend. Do you really think it's not going to reverse? Are you really that dumb? All the currencies are trading into ranges. So at some point we're going to find a market top. I think we're already done, and we're going to go lower. Which means in a monthly perspective, what you're having here in the USD MXN is probably about to reverse. Got same thing with USD damn fucking range. We're in red area. I'm not hesitating a bit to show it. This is how it goes with the forex market, because currencies are already trading inside ranges. Got advantage, disadvantage, advantage, disadvantage, advantage, disadvantage. It's just damn fucking cycles. Okay, so now that being said, I'm going to move on. Just take the last few questions. No, it was the last one. So thank you guys for attending once again. I hope you learned interesting things. I'm trying not to dumb talk to you. I could do it. Most of the coaches and guys who are trying to teach you trading will just make things easier for you. They go simpler. They'll make shortcuts for you to understand. I'm not doing this. I think you have to learn it the hard way. So I rather like to tell you things the way they are, straightforward, no simplifications. I know it's hard to take. That most of you guys will try to fight it. I mean, do it, fight it, and find for yourself that it's worth nothing trying to fight something that's bigger than you. And for many reasons, do it the way you want to. But just get to the point that if you put too much risk into a scenario, you're out of speculation, and speculation doesn't come to being right or wrong. It's just trying something and see if it goes right or wrong. And if it goes right, you have to take much more gains than if you were wrong, and you just have to repeat that damn fucking thing each and every day. With the same framework, with the same strategy, with the same fucking... I've been teaching you my 3-step strategy. This is my strategy. You can take someone else's, you can take whatever. All you need to have is a strategy, a mindset, repeating that day by day with a damn fucking risk management and patterns. And whenever you do this, you're a damn trader, okay? And you can be an investor, you can be a speculator. These are two different things, but as long as you do it right, you get the money out of those who do it wrong, and most users just do it wrong. They get into market for easy money, easy gain, leverage trading, stupid things. Take the damn money. They're here and they giving it for free. So just take them take them down. I mean, I'm teaching you guys how not to make mistakes, but most of you guys keep on doing those mistakes. So don't try to fight me. Once again, you can fight me forever. I'm just going to be right more than you will be. And I'll take even more money when I'm right than you will when you're wrong. So this is how it is. Just don't fight it. Embrace it and try to get to it. That's the hardest lessons you get into trading. Trying to get there and thinking that you'll change things is not how it works. Really not how it works. Okay? So that being said, that's the greatest lesson someone can teach you out there, and I bet no one has ever told you this, because this is not something we generally tell to beginners, okay? It's generally something that beginners learn the hard way throughout their learning, and their mistake, well, you're making mistakes, and then you're learning that you shouldn't fight things and just embrace them. So I hope you're gonna learn from this and just avoid fighting unnecessarily too long. Fighting is normal. Fighting is absolutely necessary at some point. But fighting for too long is just going to get you broke. And that's not the end you want to have. So, bye guys. Trade safe. Once again, speculation, no leverage. Just take the damn fucking core rules and avoid getting into the traps that many users get into and just get broke because of.